Welcome to TalkTickers. We cut straight to the heart of earnings calls, giving you the essential insights.
That's right. No noise, just the signals.
And today, we're diving into the first quarter 2025 earnings call for Bank Indonesia, BRI.
Let's get right to what you need to know.
Okay, so the results. Well, it's a bit of a mixed bag, you know?
Oh, how so?
Loan growth was reported at 5% year on year.
5%, okay.
Which is actually slightly below their guidance.
All right.
And what's really interesting is within that number, at the bank-only level, microbusiness growth was actually negative 2.8% after write-offs.
Negative. Wow. So the core bank struggled there.
A bit, yeah. But that was offset by really strong growth in their subsidiaries. Pagadian, the pawn business, was up 29%.
29%.
Huge. And P&M, another microfinance unit, grew 4.5%.
Okay, so the overall picture is propped up by the subsidiaries, especially Pagadian. What about the other side of the balance sheet? Deposits?
Deposit growth was pretty modest, just 0.4% year on year.
Very slow. Yeah, but, and this is key, CASA, the current and savings accounts, those jumped 6.7%.
Ah, the cheap funding. That's good news.
Exactly. That pushed their CASA ratio up to a really strong 65.8%.
Nice.
And their loan-to-deposit ratio, the LDR, actually came down to 86%. So liquidity looks good.
Okay, solid funding base then. How did that flow through to margins and profitability?
Well, the net interest margin, NAM, saw a positive trend. It increased quarter on quarter to 7.68%.
7.68. That sounds pretty good for them, right?
It is. It's actually at the upper end of their guidance for the year.
Okay. But what about costs?
Right. The cost-to-income ratio did tick up year on year, came in at 40.7%.
Mm-hmm. So earning more on loans, but operations costing a bit more. What did that mean for the bottom line net profit?
Net profit actually declined. It was down 9.7% compared to the last quarter.
Down almost 10%. Why the drop?
The main culprit was higher credit costs.
Yeah.
Setting aside more for potential loan losses.
Okay, credit costs. But how did the actual loan quality look? The NPLs?
That's the slightly better news. The non-performing loan ratio, NPL, it actually improved year on year, down to 2.97%.
So fewer loans going bad compared to last year.
Exactly. But the cost of credit for this quarter was 3.53%. So they're still being cautious, provisioning quite a bit.
Right. So improved underlying quality, but still building buffers. Did they stick with their full year outlook?
They did. Guidance for 2025 is unchanged. Still looking for a 7.9% loan growth.
Okay.
NEM between 7.3% and 7.7%. Cost of credit 3% to 3.2%. NPL below 3%.
Got it.
And cost to income between 41% and 43%. So those targets hold.
Okay, that's a good snapshot of the numbers. Now let's dig a bit deeper. There's a new management team. What are they focused on strategically?
Yeah, new leadership, some coming from Mandiri, BSI, interesting mix. And they've laid out some clear priorities.
Like what?
Number one seems to be funding transformation. Really pushing branch and RM productivity to get more of that low-cost CASA funding we mentioned.
Makes sense given the strong CASA growth.
Absolutely. Second, they're recalibrating the micro model. Sharper focus on asset quality there, perhaps explaining that bank-only dip we saw.
Great, addressing the risk.
Third, strengthening talent internally. Fourth, expanding pawn lending and also bullion banking, gold banking, especially using Pagadian's new Sharia bank license.
Ah, leveraging Pagadian's strength even more.
Definitely. And finally, just enhancing digitalization across the board, improving their apps, their processes, the usual push.
Sounds like a comprehensive plan. Shoring up the core, addressing the micro risk, and pushing growth in areas like pawn and digital. What about the big picture, the macro environment in Indonesia?
Management seems pretty sanguine, actually. They see GDP growth holding steady around 5%, similar to 2024.
Okay.
They think fiscal policy will keep supporting domestic demand, which is, crucial for a bank like BRI.
And external risks, tariffs, things like that.
They downplayed the direct impact of tariffs. Only about 8.4% of their corporate loans are to exporters, and a really small fraction of that goes to the U.S.
Where do most exports go?
China, India, Europe, Japan, Asian. It's diversified. The main sectors are things like palm oil, pulp and paper, coal.
I see.
They are, however, keeping an eye on the potential impact of, say, cheap Chinese products hitting the domestic market, particularly in textiles.
Okay, so mostly focused domestically. What about interest rates, monetary policy?
They think rate cuts could happen if the market stabilizes, but their guidance assumes no further cuts this year.
So they're not banking on lower rates yet.
Not in their base case, no.
Yeah.
Inflation they see remaining moderate. But they did flag they're watching consumer purchasing power, especially for the middle and lower segments.
Right. Always key for their core market. Let's circle back to funding. That strong CASA growth, what specifically drove it?
It was mainly savings accounts, actually. Those grew 4.7%. And the cost of all that, CASA, just 1.64%.
Wow, very cheap.
Incredibly cheap. Management sounded pretty optimistic about the cost of funds outlook overall.
Why is that?
They mentioned declining issuance of central bank securities, the SRBI, and the potential for those central bank rate cuts we talked about. Both could help lower their funding costs.
Okay. But didn't overall deposits barely grow?
Right, the 0.4% figure.
Yeah.
They said the higher growth in time deposits, which pushed up overall costs slightly, was intentional. They were building liquidity ahead of Ramadan demand.
Ah, tactical move. Got it. Okay, let's talk asset quality and lending again. That slowdown in micro at the bank level, deliberate, you said.
Yes, very much a deliberate move, tied to managing asset quality in that specific segment.
So where's the micro growth coming from now?
Primarily Pagadian's pawn lending. That's the engine for micro segment growth at the group level right now.
And other lending areas, consumer, corporate.
Consumer lending saw slower overall growth for the group, but it was actually strong at the bank-only level. So bit of a mixed picture there, too. Corporate lending growth also slowed down.
Okay. And what about dealing with troubled loans? Restructuring, write-offs?
They expect write-offs of restructured loans to stay at similar levels to last year. They think Q1 might actually be the peak for the cost of credit this year.
Peak cost of credit in Q1. That would be positive if it plays out.
It would. And when they do restructure microloans, they're being quite selective. Looking for borrowers with genuinely good business prospects, the ability and intention to repay, and importantly, sufficient collateral.
Sounds like a much tighter, more disciplined approach there. What about non-interest income and expenses? You mentioned gold earlier.
Yeah, non-interest income grew well, and a big driver was net gold fee income from Pagadian. Bullion banking, pawn services. That's clearly a bright spot.
And expenses, you said cost to income was up.
Right. Operating expenses were seasonally high in Q1. They moved the Ramadan incentive payment into the first quarter this year.
Ah, timing effect.
Exactly. Management said they're still aiming to hit their full-year guidance for OPEX to assets, so they expect it to moderate.
Okay. One last operational point. Repricing. Can they push loan rates higher in this environment?
That's the million-dollar question, isn't it? Management acknowledged it's tough, very competitive out there.
So, limited room.
Not necessarily no room, but they have to be strategic. They see potential in repricing payroll loans, maybe by targeting private companies and SOEs more aggressively.
Okay.
And maybe diversifying who they target for commercial mortgages.
Right.
For SME and commercial clients, though, it sounds like the focus is less on just the loan rate and more on the whole relationship, profitability fees, other services,
Right, the ecosystem approach. Okay,
Yeah.
that makes sense. So, stepping back, if you're an investor listening to this, what are the key takeaways?
Okay, number one, that strategic shift in micro-lending is critical. Watch how they balance asset quality with growth there. It's a deliberate recalibration.
Right. Less volume, better quality maybe?
Potentially at the bank level, yeah.
Yeah.
Number two, Pagadian. It's becoming a really powerful growth engine, not just in pawn, but in gold services too.
Yeah.
That's a definite positive. Three, the financials. Improved in and that strong CASA ratio are good signs for core profitability and funding. But you absolutely need to watch the credit costs and the impact on net profit. Q1 was high.
And the unchanged guidance provides a benchmark.
Exactly. It gives you something concrete to measure against through the year. And finally, their relatively stable macro outlook and limited direct tariff exposure offer, a degree of comfort about resilience.
Good summary. Okay, let's shift gears. Time for our This Is Not Financial Advice segment. What outrageous but plausible trade idea have you cooked up based on BRI's call?
All right, let's get a little creative. We heard about BRI's big digital push, right? Bremo, their mobile app, nearly 40 million users.
Yeah, huge user base.
And their massive agent network, Brilian. They're driving tons of digital transactions. So here's idea number one. Think about the plumbing.
The plumbing?
Yeah, the infrastructure. Consider going long Indonesian telecom infrastructure companies.
Ah, the ones providing the data networks.
Exactly. More Bremo usage, more agent transactions. That means more mobile data traffic, more back-end processing. These infra players could be indirect beneficiaries of BRI's digital success.
Interesting angle. Playing the enablers, not the bank itself. Got another one?
Okay, idea number two. Playing on that Pagadian strength in gold.
Right, the bullion banking and lending.
Pagadian's gold business is booming, and globally, gold demand is strong. So consider a paired trade.
Okay.
Go long a major global gold miner, maybe one with relatively higher production costs, so they benefit more from rising prices.
Long a gold miner and short.
And short a basket of Indonesian consumer discretionary stocks.
Why consumer discretionary?
The thinking is, if gold prices really take off, or if the broader economy sees people flocking to gold as a safe haven, it might squeeze consumer spending elsewhere. So you're leveraging Pagadian's specific gold strength via the miner, while hedging against potential broader consumer weakness in Indonesia.
Long, high-cost gold miner, short Indonesian consumer stocks. Definitely outrageous, but I can see the logic. Plausible, even.
That's the idea. Food for thought.
Indeed. Well, that wraps up our deep dive into Bank Indonesia's first quarter earnings. We've hit the key results, the strategic shifts, and thrown out some wild ideas.
Remember, this is TalkTickers. We give you the insights, but you have to do your own homework.
Yeah.
Always do your own thorough research before making any investment decisions.
Absolutely. Those trade ideas are purely speculative, just for discussion, definitely not financial advice.
So what stood out to you from BRI's quarter? We'd love to hear your take.
Join the conversation. We'll be back soon with another deep dive into the world of earnings.